Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. On July 2nd, Tesla provided an update on its second quarter deliveries, and we got some good information. It was another record number of cars delivered, record number of cars produced, sequential increase in both those categories, year over year increase. However, there's a couple of things that we learned that aren't necessarily great news. And the big thing, there's a lot that we still don't know about Tesla that we're not going to know until it actually reports earnings in mid-July. I'm Jason Hall. This is The Smattering. I got Tyler Crow here with me. We're going to talk about what we learned and really focus on what we don't know yet that's really important for Tesla investors to understand right now. How's it going, Tyler?
Jason, it seems to me that it's hard to get a relatively unbiased opinion on Tesla. It's either hyper bullish people or hyper bearish people. So let's try to really go down the line with this one and see if we can be as unbiased as possible.
I like that idea. Neither of us have a stake in this. I've owned Tesla shares before. I sold a number of years ago. Tyler?
Yeah, I did. I owned through Solar City, which subsequently sold.
You backed into some Tesla shares.
Yeah.
The key point is that where we stand in this is we understand the automotive industry, automakers, and Tesla is the exception to the rule of companies that build cars and sell cars that have actually been a really good investment. So let's try to be objective and look at the company. Here's the background before we get into this recent release we got about production and delivery figures. Tesla has been the first mover and has become the top dog in electric vehicles. And it's not even close at this point. That's starting to change maybe as more companies get into EVs and invest billions of dollars, but they make more EVs by far. They sell more and have done so very profitably, have built a really strong cash position, paid off a ton of debt as they've built this. But again, fast forwarding to where we are now and what we've seen over the past several quarters is that even as deliveries have grown, and I'll give you some numbers. So we look at the fourth quarter of 2022, delivered 405,000 vehicles, round figures. The first quarter delivered 423,000 round figures. And then the second quarter, 466,000. We're seeing continued sequential growth in deliveries. The year over year growth of those numbers is between 40 and 50%, depending on which quarter you're looking at. Tyler, that's good. I think there's no getting around it. That's a good thing. Tesla is showing that it can still generate and find demand for its cars.
You can't deny that. The rate of growth is slowing down a little bit, but still that is a very uncommon rate that you would see in this industry. To look at it from both sides, yes, it's slowing down, but it's really hard to find anyone in the automotive industry actually growing this fast.
So let's talk about one thing that's also happening at the same time that is a little bit more concerning, because they've done a really good job, to paraphrase Travis Hoyam, who's somebody else that follows the company really closely I've talked to. They've been really good at turning cars into cash, right? They've done a pretty good job with that. But it does look like they're starting to have a little bit more of an issue and maybe turning more cash into cars. Let's go back to the fourth quarter. Delivered 405,000 vehicles, but they made almost 440,000. So they made roughly 35,000 more vehicles than they sold. And then in the first quarter, you saw the same thing happen. They made 20,000, 18,000 vehicles or so more than they sold. So ideally, you'd want to see a manufacturer maybe in that next quarter, their deliveries would exceed production, so they soak up some of that existing inventory, but that didn't happen. Again, in the second quarter that we just heard, same thing, excess production of around 13, 14,000 vehicles. So inventory does continue to build at Tesla. What are your thoughts?
It's a lower margin, but it's still a build. And building inventory is a drain on cash. Now, you could theorize that deliveries are going to catch up and it's going to take longer to get new production going, whether it be the facility in Mexico they're looking at doing or bringing up production to full scale at either Shanghai or Berlin, anything like that. Those are on longer timelines, and maybe that inventory level will start to draw down a little bit until those happen. But that's one of the unknowns. I know you said one question at the top, but there might be a few bonus ones in there at the end.
Let's move from what we do know, what we just learned, to really the big questions Tesla has to answer. And I think you're right. I don't think it's one question. I think it's multiple questions. But I'm going to start off with the one that to me is the biggest one, and potentially one of the reasons why deliveries have continued to grow so fast is in essentially every market that Tesla operates in. Really going back into late last year, Tesla has cut prices pretty substantially in some cases.
Everyone has been seeing that, and you've been seeing margin compression. Gross margins are down, operating margins are down, and we saw more cuts this quarter. So the logical question is how deep did those cuts go?
When Tesla reported its first quarter results, we're only a fraction of the majority of the price cuts. Most of the price cuts that happened would have affected orders that came in after the company reported those results. So I think this is really the first quarter where we're going to see the economic impact of those cuts. And they're going to hit, first of all, they're going to hit at gross margin, right? So this is the dollars that come in after all manufacturing costs are covered. So this is the money to pay your bills. And then we're going to see how those cuts have affected operating margins and then free cash flow, right? There's a waterfall effect when you cut your selling price. And Tyler, I don't think we can look through their supply chain and identify any places where costs have necessarily come down.
No, not really. Lithium prices have gone down, but that wasn't until late May. When it comes to automotive, it's not just Tesla, it's kind of everybody. There is a lot of fixed costs that just you can't get around. And when you have a decline in gross margins, it can profoundly impact the bottom line.
So you put it all together, Tyler, and I think, again, what we do know is that Tesla has delivered for the past 5 to 7 years. There's no doubt about that. But as we've gotten into this environment where we've started to see maybe a little bit of a squeeze on demand, a lot of its competitors are struggling with excess inventory or either bringing inventory online. And we know Tesla's building its inventory. So I think investors should be really cautious right now with Tesla, maybe even get through earnings, and maybe worth getting through earnings to see how those costs are affecting the bottom line and then maybe reevaluate going forward.